Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 27th of September 2018, and we're giving you our reflections and views on yesterday's decision by the Fed to raise interest rates and what we believe at this moment in time as to future interest rate directions and its impact on gold and silver. Well, as expected, yesterday the FOMC announced an increase in the Fed's fund rate from 2% to 2.25%. Now, this was not revolutionary or unexpected, as it has been highlighted for some time. However, what is the Fed's thinking about future rates, and are they to be believed? Well, first of all, do you remember when interest rates were just 0.5% back in 2016 and even lower in 2015? Well, on Peter Schiff's website, Schiff Gold, on March the 10th, 2015, Dixon Buchanan put forward quite an elaborate case as to why it was impossible for the Fed to raise rates. Not improbable, but impossible. His words were, quote, "The Fed can no more raise rates than it can borrow money into oblivion," unquote. His boss, Peter Schiff, produced many articles, appeared on many TV and radio stations and YouTube videos stating exactly the same thing, and the pumpers jumped on the bandwagon. Gold and silver will rise through the roof because the Fed cannot raise interest rates and the dollar will collapse. Now you may ask, why do we raise this in relation to yesterday's announcement? Well, we shall tell you. Since the time Schiff and his cohorts told you that the Fed cannot raise rates, it has. Not once or twice, but 3 times already this year alone, and 7 times in the last 8 quarters or 2 years. Do you remember Janet Yellen when she said that the Fed was looking to raise rates and she was called a liar? She only said this to give the impression that the Fed was in control and to prevent a run on the dollar. She was misleading the public. Well, she wasn't. And our concern today is that we have already seen videos relating to yesterday's announcement stating that although rates may go up, gold and silver will rise to the moon because the Fed is lying yet again. Really? Now, yesterday, Jerome Powell, in his press briefing, stated, and we quote, "Unemployment is low. The number of people working is rising steadily, and wages are up. Inflation is low and stable. All of these are very good signs," unquote. He also officially ended the accommodative stance, thereby indicating a change in Fed policy, with more interest rates to come. Now, we said yesterday in our video alerting subscribers to the announcement that it's the Fed's desire to have rates normalize at or around 3%. And if it fulfills these objectives, then we shall see rates closer to 3.5%. Now, let us state clearly that there are, in our view, too many clouds on the horizon to achieve this full program in this timescale suggested. But we are confident from our banking contacts that the Fed is assuredly determined to reach that 3% goal, even if it fails to reach 3.5%. So what effect does this have on gold and silver? Well, to be blunt, the Fed were quite hawkish yesterday, and gold currently stands at $1,196 and silver at $14.41, slightly down post the announcement, but very little. So what is happening? Well, we shall give a more substantive appraisal in our weekly roundup on Saturday. However, for now, the market is digesting the news. The dollar index is marginally up at 94.51 and the Dow down 100 points. The The Fed sees economic growth in the US continuing for the next 3 years. We think they are optimistic. However, the next 2 years is indeed a possibility. What we do see is continuing dollar strength. Why? Well, we now know that interest rates are likely to continue to rise and the Fed is going to be less accommodative. This alone strengthens the dollar. However, the impact on emerging markets will be even more devastating, especially those with high levels of dollar-denominated debt. Here, we shall continue to see an exodus of funds out of their currencies and into the dollar, and this alone will be disadvantageous to the price of precious metals. In fairness, though, the fact that they have managed so far to stay around $1,200 for gold and above $14 for silver is a testament to the strength of physical buying when prices dip to these levels. However, whether there is enough currently to maintain that momentum is questionable. We believe the stock markets will bounce back soon on the view that the economy is seen as being strong and will continue in that vein. And lower precious metal prices, rather than a curse, could in fact be a boon to those of us who believe that long-term they are the right thing to hold some of our surplus funds in. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on Twitter. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.